Hello, everyone, and I'm going to make a talk about past, present, and future of blockchain tech, from peer-to-peer money and to agentic finance. Covering the most important aspects, I believe, from 17 years to the moment we have years of cryptocurrency history. And first, let me introduce myself. I'm Alexander Chepurnoy, so currently a contributor to ERGO cryptocurrency and also a free developer and researcher. I'm professional developer since 2006. And working in cryptocurrencies since 2013 after discovering Bitcoin back in early 2011 because I used to be big enthusiast of peer-to-peer networks even before, and then somehow discovered Bitcoin as another peer-to-peer network in early 2011. I've done some publications published in top-tier cryptographic venues such as Usenix and so on. A lot of blockchain related workshops, financial cryptography, and so on. You can check my publications on the website. And I visited LNM IT in December 2025 for first stability workshop and also Unstoppable Hackathon. Maybe some of you guys saw me there. All right. So let's start. Well, oh yeah. Okay, so how it started. So in January 2009, Satoshi, anonymous author, released the source code of Bitcoin, and the network was launched around that time. And there also was a white paper titled Bitcoin, a peer-to-peer electronic cash system. What's important here? It was considered as a peer-to-peer network, right? And also, kind of cash system, so preserving properties of cash, but in digital form. And actually, it was a continuation of very long line of different efforts. So it wasn't the first attempt to build peer-to-peer cash systems. First one was DigiCash by David Chom, the author of many foundational concepts in cryptography, including blind signatures and so on. And he came out with a design of digital cash with somewhat privacy preserved based on blind signatures. And he even made a commercial company, DigiCash, which failed because of complex relationships with banks. DigiCash had trusted issuer of electronic cash notes, and those notes were backed by bank deposits and so on. A lot of problems with legalities and so on, and it failed in within a few years. Then we had the first generation of peer-to-peer networks, starting with Napster and so on. So they were mostly about content sharing, file sharing, right? And after Napster failure, there were a lot of second-generation file sharing services, including Modular.
So,
And Yeah.
Yes. So can we ask questions in between, or we
Oh,
have to
yeah,
wait?
yeah, yeah, yeah. Feel free to ask questions.
Yes, yes. So I have one question. So what do
Yeah.
you think? Why this Bitcoin suddenly popped up? So many theories are there. One is due to financial crisis, or some says due to this they want de-dollarization, and others say have other views. So what do you think about it? Why something like this
Ah,
suddenly popped up?
I see. So it's
If you
partly
want to
covered by the next slide, but yeah, about crisis on. So let me provide some thoughts as well, right? Then we had Modular, right, which introduced distributed virtual currency to incentivize file sharing, right? Well, popular ideas, well, these days after Bitcoin, I mean. But before it was truly innovative, but they had bad tokenomics, so failed quite quickly. And then, yeah, there was Japanese peer-to-peer network, quite popular in Japan, called IWAT. So energy linked mutual credits peer-to-peer currency, which also has white paper titled "Peer-to-Peer Money Free Currency Over the Internet." So it was a bit popular in Japan, but yeah, it had it was quite complex to use, and it used kilowatt per hour as unit of account and so on. So yeah, it was truly experimental and didn't reach the masses. And then Bitcoin, right? So what's made it different? So unlike DigiCash and yeah, but basically all earlier systems, it didn't have any central authority. Right. So, well, the ledger is maintained via proof of work. And yeah, money issues also are not affected by any party or any kind of governance or whatever, right? So, it's well, pure mathematics based consensus, right? Let's say no central authority. Then we have immutable public ledger. And then on top of that, we have trustless issuance, right, of Bitcoin. So that there is some algorithm every participant is following, and that's part of consensus. And because of that, yeah, you can basically trust Bitcoin as an asset, right? So no one has control our issuance under certain assumptions, which could be trusted probably, and yeah, proven with time also. And yeah, because of that, I believe, yeah, Bitcoin got a lot of popularity, right? And yeah, well, financial crisis with unlimited money printing actually, yeah, well, added a lot to Bitcoin popularity, right? But also, well, absence of central authority made Bitcoin popular, right? So, well, the first promo event basically of Bitcoin community was getting through financial blockade of WikiLeaks. Back in 2010, WikiLeaks, the website publishing leaked documents from different governments as well as corporate bodies, got sanctioned by Visa, MasterCard banks, and so on. So it stopped to accept donations because of that, and there was a threat of shutdown because of Yeah, Bitcoin community reached the WikiLeaks, and WikiLeaks started to accept Bitcoin donations, and that was quite successful promo campaign. Then there were more. So when you need for unstoppable money, Bitcoin comes, right? And recently, just days ago, there was extremely good promotion of Bitcoin from Iranian government, which announced that it would accept fees for passing Hormuz Strait via Bitcoin, right? So, well, it's the clear sign that yeah, it's the form of money which Iran believes can be sanctioned, right?
So,
Uh,
yes, so in Iran, before this war, this was very popular for in among general public or not?
Iran? What? Bitcoin?
Yes, in Iran before this war, the Bitcoin and other options were very popular or not?
They were actually Bitcoin, but also USDT, right? So when I visited Iran back in 2011, even so 7 years ago, right? So yeah, a lot of from what I heard, like most of import operations were paid via USDT, right? But then with time, USDT got more and more problematic because it's controlled by a centralized issuer, Tether company, right? Commercial company. Which is blocking now a lot of wallets, and with Bitcoin you don't have such issues. So yeah, Bitcoin is also popular there. So if you go to Tehran Bazaar, you can find a lot of exchange booths, like traditional Havala booths, right? And even back then, most of them accepted Bitcoin and USDT. So now I believe probably all of them, right? Okay, so let's continue. Let's get back to the Satoshi white paper. So the title was peer-to-peer electronic cash system, right? So, well, this unstoppability of transfers means that Bitcoin is truly working as peer-to-peer, right? In the sense that if I'm a peer in the network and I'm willing to transfer my Bitcoin to another peer, no any party can stop the transfer, right? So that's what Bitcoin properties are providing, right? So yeah, but then we have the cash part, right? Is it working like cash, peer-to-peer cash? So what is cash, right? So cash is something which is we are freely exchanging for goods and services and back, right? So we are providing goods and services, getting money, and then paying in return of goods and services further. But Yeah, so it's can be considered as peer-to-peer, right, in the real world when we have physical cash. So it couldn't be stopped without physical violence, right, or threats. So normally it's working as peer-to-peer. Is Bitcoin working as peer-to-peer cash? So, when there are no alternatives, it's not. But when there are alternatives, so Bitcoin is not showing as a popular cash option, right? So, when we are talking about some exotic, from uh, observed everyday life cases such as WikiLeaks financial blockade, or Iran charging ships in Strait of Hormuz. Yeah, so in such exotic cases, Bitcoin is working great, but in everyday life, there were a lot of efforts to introduce Bitcoin, but with time, almost all of them failed. And so, the Bitcoin community started to realize that back in 2010, and then there were a lot of discussions still going on what is the reason, and yeah, because it's technology after all, so people are trying to find some tech problem, right, and find a tech solution. So, well, one of the earliest thoughts that blocks are slow and limited in size, right, which is true. But then there are some economic reasons. Bitcoin is a volatile asset, right? Because its issuance is trustless, right? Which is great because you don't trust anyone. You just checking issuance function and making your investment decisions based on that solely, uh, uh, which is great, but then issuance is disconnected from the economy, right? So it's disconnected from production of goods and services, unlike fiat money. uh, so uh, it's causing crazy volatility. So back in early days, people tend to think that it's just temporal property, and with time, with increased liquidity on exchanges, volatility would shrink. But it seems it's not the case. So the latest research I saw in early 2020s shown that average daily volatility is still the same as back in 2013. So yeah, volatility is the same over the years, right? So it's crazy volatile assets, and because of that, it's not so good as peer-to-peer cash for everyday use. Right. So then the community started to do different experimentation, such as Lightning Network, uh, so off-chain payments backed one by one by on-chain reserves, which is bypassing the issue of slow and limited in size blocks, right? But the issue of volatility is still the same. Uh, because still you have some assets to be used for payments, which is disconnected in issuance from the needs of the economy. Then proof of stake and BFT blockchains. The idea was to have faster blocks, right? So there were posts of Vitalik Buterin of Ethereum that proof of stake would provide faster blocks, which is technically looks weird because proof of work is the most efficient form of consensus. Simply because, it's totally asynchronous, right? So every miner is working on its own and publishing a valid block once it's ready. While proof of stake, most of proof of stake consensus protocols are using some means of agreements. between validators and BFT, even more BFT, Byzantine fault tolerant. Protocols do necessarily have some agreements, right? Which is taking network bandwidth and time. But yeah, anyway, so people are trying to use proof of stake and BFT. So often such networks do have faster blocks, but just due to shrinked, well, networks, right? Often not peer-to-peer anymore, even. So even network-wise, some newer blockchains, well, not so peer-to-peer by nature. And then to tackle the volatility, people started to do algorithmic stable coins since 2013. Well, all the early algorithmic stable coins failed. And then centralized stable coins arisen from 2014. And yeah, so somehow centralized stable coins bypassed algorithmic ones because, well, the very first attempt, Tether, is still with us, right? So, well, it's working for 12 years. Well, despite many accusations, investigations, and so on, so Tether is still with us, and yeah, most of algorithmic, so decentralized options failed, including new shares, one of the earliest, then BitShares assets, then Terra, probably the most famous algorithmic stablecoin which failed. Okay, so then with all that experimentation done over the years, so what do we have now? So a bit absurdic for cryptocurrencies and decentralized technologies, right? Peer-to-peer technologies. That's most popular crypto product is centralized stablecoins. And even more on top of small-sized networks such as Tron, for example, which is using delegated proof of stake to reduce agreements procedure to just well, very few chosen validators. And yeah, so then we have peer-to-peer cash, right? But it's more like, after all, it's more like DigiCash, right? But without privacy. So current peer-to-peer cash is fully transparent, and Tether company is blocking wallets like every day. And people are still using Tether, right? Because of simplicity and because it provides borderless dollars, right? To like everyone. Modular freezing risks. So Bitcoin is now considered as kind of digital gold. It's more or less good in that role. And sometimes it's been used as most trustless peer-to-peer, well, mean of payment option, as case of Iran shows, right? Any questions so far?
So you have not mentioned anything about Algorand.
Algorand.
Yes. So
Oh,
what do
but
you say about that?
yeah, so Algorand is in this category. It's the problem with Algorand is that it's not popular, right? So it has stable coins, I believe, but like USDT, USDC, but it's not popular network, probably because it's not so small sized, right? So it's probably better than Tron. So the irony is that, yeah, well, so somehow, well, use cases are pushing towards more centralized solutions, right? Like Tron. So, well, Algorand then and Cardano is not so popular. Well, Cardano also not popular because it's not providing centralized stable coins because it's not easy to freeze
So
as
you
it's
mean to
there.
say volatility is the problem?
The problem is that yeah, well, the most popular crypto product is centralized stable coins, right? And well, centralized stable coins also popular where fees are low and transfers are fast, and that would mean networks are reduced in size, right? So even if they are peer-to-peer. Formally, then in fact, yeah, it's about not so many validators, right? And yeah, also, well, usually quite terrible tokenomics and so on. So it's not trustless issuance of native tokens and so on. But yeah, well, as transport layers, they are working more or less good. In most cases, unless you are Iranian government, right, and you need for something not reduced in network size and so security, right? And yeah, so I don't know much about well Algorand these days even. So is it popular in India?
I don't see any cryptocurrency. The Algorand is not popular, but Algorand has a research lab in IIT Bombay. They have funded a huge research lab in India.
Yeah, yeah. So
So,
yeah, they have a lot of researchers. So.
across the
Uh,
globe.
like 10 years ago, I worked with Professor Leo Raisin of Boston University back then. And then, yeah, he joined Algorand. And yeah, I also have other researchers I know working there. But yeah, well, in applications, yeah, it's behind more centralized and well sometimes even copycat strategy choosing competitors. Okay, such as Tron. All right, so then yeah, what's going on also? So Lightning adoption is going slow. Right, so off-chain payments are not catching up. Then we have rise of somewhat on-chain DeFi, which is now looking like hundreds of billions of USD, mostly in lending products, stable coins, and yeah, DEXs, liquidity pools. So DeFi is far from ideal, let's say. So every day we have hacks. Well, most of DeFi products are not so DeFi. They have crisis with governance and so on. Uh, then, yeah, also, in many cases, it's not efficient, right? So that's why, for example, people are working for more efficient DEXs, right? Then, yeah, institutions are coming regardless, DeFi inefficiencies and failures. There are now attempts to tokenize real world assets for hundreds of billions USD, then maybe trillions even, so stocks. Uh, well, the different funds are getting tokenized, real estate, and so on. Then, yeah, well, we have AI, right, which is rising fast. AI bypassed blockchain by like 10x in investments now. And well, AI is now mostly about agents, right? So some specialized entities with specialized context focused on specific tasks to get done. And yeah, well, agents are already reworking a lot of industries. In the first place, software engineering, as we know, probably right. And well, it's considered that agents need for access to payments, right? And as they cannot make bank accounts easily, so cryptocurrencies are considered as natural solution for payment rails for agents. Okay, so let me check time. Uh, I don't know. Wait. Oh, so we have 1 hour, right? Still, nice, nice.
So,
Okay, so
so anyone
yeah,
has yes. So anyone has question they can ask in between. There is no
yeah,
uh, yes.
Yes, sir. I have a question actually.
yeah,
Yes.
yeah, yeah. Please ask.
Mm. So I saw that you chose to go with proof of work in place of proof of stake for Ergo. So
Yeah, yeah.
yes, was there a like a specific reason or like a specific benefits that you saw? Like even though like
Oh,
Ethereum and everyone with proof of stake was actually being hyped so much.
yeah. So yeah, as I described, well, proof of work is well, naturally the most efficient kind of consensus, right? So it's totally synchronous. Then also, proof of work is allowing for more efficient light clients. Right, so in Ergo, we are using NIPO non-interactive proof of work technology, which is allowing to prove the current state of blockchain in just like 100 kilobyte. So it's then can be used where internet connection is almost non-existing, right? So it's allowing to bring cryptocurrency payments in places like Africa or Iran, right? And then also proof of work is distribution mechanism, right? So it has trustless issuance via basically decentralized auctions, right? So you can consider proof of work based emission as miners well participating in auctions taking place every block where you are paying for a chance to get rewards, right? So it's kind of randomized. Maybe not auction, more like a lottery, right? So the more tickets you are buying with electricity, the more chance to get reward. Right, but like in auction and unlike in lottery, there is winner always. So yes, so something like that, and because of that, you are not messing with distribution, right? So as developer, you are just proposing the code to miners which are controlling the network, and the emission is going distributed without developers and so on, right? So distribution is a big problem usually in proof of stake. So most of proof of stake networks just centralized, and to get good distribution for proof of stake, you need to do huge ICO probably, right? To sell all the tokens before the network launch in a fair way to maximum number of investors. Which is also tricky, and so yeah, in this regard, proof of work is simplest option. It's clean,
Yeah, thanks a lot.
it's fair, right, and so on. And yeah, the distribution is also a big problem in 2026. So yeah, almost every day we have scandals in the space with VCs and teams dumping on retail, right? Because, well, in proof of stake and blockchain projects with tokens, like DeFi projects. So the team and VCs are getting, usually most of tokens, and then they are dumping on retail investors, right? And in most cases these days, because market is not growing as a whole, it's met with anger, right, from public. Yeah, the distribution does matter a lot these days, and proof of work is achieving fair distribution. Okay, then yeah. So then what also we have these days? So centralized USD stablecoins such as Tether are posing threat to economic stability around the globe, right? Because in many places they're replacing fiat currencies, they're replacing existing banking systems, and then a lot of places around the globe becoming dependent on just some commercial company, right? And yeah, it's this commercial company was involved and maybe involved now. I don't know much about these days in a lot of scandals, so can be considered maybe a bit shady. All right, so this is not a good situation, and also, centralized USD stablecoins issuers are buying US treasuries. So economies which are getting dependent on USD stablecoins are also working for US Feds basically. Right, which is also not considered as a good option in many places around the globe. And then upcoming agent-to-agent payment standards are making it worse because, those standards such as A2A are made by US corporations such as Google and Coinbase, and the corporations injected dependency on not on even arbitrary USD stablecoin, but USDC stablecoin, right? So some specific stablecoin dependency is injecting. So if agent-to-agent payments are going to be popular around the globe, that would mean vendor lock basically on some centralized stablecoin. Then it's making the situation even worse, right? And the problem would be hidden for most of users, even for more probably in this case. And most of blockchains are unnecessarily centralized and complex, right? They have reduced peer-to-peer networks, with a lot of trust assumptions hidden. And at the same time, yeah, well, development of Bitcoin is stagnant, right? So, yeah, those issues which we going to solve, right? So,
So yes, so I have a
the
couple of
current state.
questions.
Yes, yes.
So a lot of questions are there, but I will start with one specific question to you. What about Russia? How in Russia things are going on in this regard?
So, well,
So I think that they do not accept any this kind of technology which is dominated by US.
so,
So how government is taking it, and what kind of uh, what is happening in the
y-
ecosystem over there?
yeah, so actually, efforts are not that great, let's say. So, um, because of the need to bypass sanctions, right?
Hmm.
So, originally, well, financial companies specialized in that, right? So, well, there is the whole industry of financing bypassing sanctions. So, it relied on USDT, right? And it used USDT without any thought about risks before freezing started at some time. I don't know, maybe 1 year or 1 year and a half ago. And when USDT had frozen some accounts, the biggest one was about 25 million USDT. So there were certain efforts to introduce alternatives, right? So currently, after USD stable coins, the most popular is A7, A5, which is ruble denominated stable coin for Russian companies made specifically to bypass sanctions. So it's basically like Tether. So still centralized stable coin, but ruble denominated with bank accounts backing it in Kyrgyzstan, as far as I know. And they're also opening offices, A7, A5 stable coin company, opening offices in Africa, China, and so on. Right, to make trades via stablecoin. And for some reason, they're using Tron blockchain because they're considering Tron as a Chinese blockchain, from what I've heard, and they think because of that A7, A5 contract is secure. Which doesn't make sense because, well, Tron is not much Chinese blockchain, and yeah, well,
But but I think
it's
Chinese
still,
government has not allowed blockchain, as far as I know.
yeah, and also, well, Justin Sun, so the owner of Tron blockchain basically is trying to do like different political games, including with the US government. So it's kind of strange to rely on that, right? And yeah, it's also kind of strange to rely on any, well, centralized entities here, right? But it is what it is. And in regards with agent-to-agent payment standards, so I'm not aware about any well, alternative proposals. Even more, if we are talking about China, even, right? Which is now on par with the US in regards with AI. Some Chinese models are now outperforming top AI models. But in regards with agent-to-agent payments, payment standards, I'm not aware about any efforts to introduce alternative payment standards, which are free from USDC vendor lock, right? Let's see. I think well necessarily such alternative standards should appear, right? At least in China, because of AI race and position of China in that race.
Okay, so
Uh,
you are saying कि there are two conflicting interests. One is China doesn't want the control on currency, doesn't want to release the control on currency, and the second thing is, so because it want to become power in AI, so it is going to be inevitable for them to use these agentic system for this purpose. This is what you are trying to say.
Right. Yeah, well, Chinese models are now on par, right? But in general, China is still lagging behind a bit in regards with agentic things, right? Still, maybe Anthropic is setting standards, but Chinese companies are catching up, and then, yeah, if agent payments are getting popular, then the question would be why Chinese agents, right, especially ones deployed in mainland, would use USD stablecoin based payments, right? That's not the case, obviously. So then there would be need for some alternative standards. And then, yeah, probably after China, other big geopolitical players would catch up, right? With more standards to bypass USD and to that moment, probably also yuan vendor lock, right? Let's see, but yeah, it should be like that. It could be the case that yeah, agent to agent payments are tied to USD stablecoin only, right? Especially considering risks of sanctions and so on. Well, for Chinese as well. Well, and many other jurisdictions actually.
So
Yeah, and for centralized USD stable coins, well, I'm not aware about any successful Chinese or Indian or Brazil counterparts or whatever. But from what I know, yeah, a lot of players are now working on national stable coins, right? Well, from China through Hong Kong to Uzbekistan. Yeah, kind of small country, but from what I know, even they are working on some national stable coin. But yeah, often such attempts would be strange. From what I know, yeah, well, countries which are exporting a lot, like South Korea, Japan, well, commercial banks there are working on stable coins to replace Tether in some economic circuits, at least.
okay, so let me ask some technical aspect of it.
Yeah,
So one thing you were one person has asked you that why did you prefer proof of work? So you said something. I mean, you gave some reasons, but
yeah.
and but tell me about this proof of work where you have to do a lot of computation, and given this the amount of energy it consumes. So what do you say about that part?
Yeah, it consumes a lot of energy, right? But it's translated into the assets, right? This trustless issuance of Bitcoin, right? So it's backed by electricity bond also. To generate a block with, let's say, 1 million worth of USD in block rewards, you need to burn under ideal free market conditions, somewhat similar amount of electricity, right? Uh, so, uh, Yeah, then it's boosting value of Bitcoin, right? That energy is allowing Bitcoin to stay as collateral with high value, right? So then, yeah, well, burning energy is not that bad, and yeah, it can be compared, I believe, to mining of gold, right? So gold is also valuable because it's hard to get it, right? To mine it. You need to burn a lot of electricity and also destroy ecology with well toxic chemicals and so on to get gold, right, and that's what makes it valuable. So it's more or less, and yeah, well, I don't think well it's bad, right? So when you are removing this part, energy part, right, and well, then the question is how will you do issuance in trustless way, right? But also what will back the value of newly minted coins, right?
Mhm. So see, that's fine. So the point is, assuming everything is fine, how do you, what do you say about this volatility which is there with the Bitcoin? Why it is there?
Oh, so it's there because yeah. So see, when central banks are issuing fiat money, right? So it's actually a very complex mechanism. So it's produced by new money are produced by commercial banks, in fact, right? But central bank controlling this process to some extent with key rate, right? So by limiting commercial banks' inability to borrow money from central bank, right? And yeah, then. Yeah, well, it's indirect, but after all, central bank is trying to tie well amounts of money being issued over a period of time with amounts of goods and services created, right, over the same time. So if there is perfect match, then there is no inflation, right? And value of money then remains the same. So when you do trustless issuance, but yeah, you need to trust not just central bank but also commercial banks, right? So then there is some oversight from central bank, which is another mean of controlling the emission, and so on. So it's a complex mechanism, and well, after 2008 financial crisis, people don't trust it much, right? And yeah, there were a lot of other events of money printing, basically, and yeah, interventions. People don't trust those money emission mechanisms. But when you are going to perfectly trustless issuance via some predefined algorithm, then the problem is that, well, this issuance is not connected in any way to creation of goods and services, right, in economy. So if more Bitcoins created than goods and services in Bitcoin economy, then there is inflation, right? If more goods and services created than Bitcoins over some time, then it's causing deflation. Well, another problem is that most of value of Bitcoin is speculative, right? Which is well, adding volatility on top of that, and actually most of volatility is coming from that speculative use case. But even without speculations, so well, disconnecting issues means volatility. Means constant inflation and deflation, and yeah, it's hard to imagine how well some economy can function purely on Bitcoin. Probably not at all. Right. So, yeah. Any more questions?
Yes, yes, so carry on. I will ask. I think due to me, you have stayed here for a long time, so you can carry on. I will ask.
All right. All right. So, then, yeah, with that present state of blockchains in the real world. So, what challenges do we have ahead? Let's start with simplest ones. So technical. So, as well, quantum computers threat is considered more and more real, right? Despite uh, not being real in an observable future. So there is a big demand for efficient post-quantum cryptography, right? So current post-quantum cryptography is totally inefficient for blockchain settings. So if we take NIST-approved cryptographic schemes such as Dilithium 2, lattice-based signature scheme. So it has a signature size of at least 60x of current, right? So that means immediate crisis in both Bitcoin, Ethereum, and so on. Because of need for bigger blocks and network congestion and so on. So yeah, there is need for more efficient post-quantum cryptographic primitives. Well, signatures in the first place. Then, yeah, well, still, privacy is not that good. There is need, if we are talking about DeFi, for dark pools to protect traders from their positions being traceable, and to combat, well, front-running attacks such as MEF and so on, MEV. Then, yeah, as always, there is need to improve scalability, but without sacrificing peer-to-peer networks, right? The beauty of big peer-to-peer networks, where you may have multiple hops from one peer to another, and still, well, efficiency is needed, right? And scalability means better throughput in this regard, in this environment. Okay. But yeah, well, we can solve those technical issues, but there are also foundational ones, right? Which are probably clear after my talk. So how can we get to trust minimized peer-to-peer cache setting, right? So with blockchain tech and other kinds of technologies we have now in hands, how can we do trust minimized peer-to-peer digital cache in real life? And yeah, by trust assumptions and efficiency and so on, it should be useful for the real world after all, right? So it shouldn't be like today. So when we choose whether to use trustless peer-to-peer options such as Bitcoin, or efficient option such as centralized stablecoin on Tron network, right? With reduced security and control from certain parties. Right, so what can we do about that? So first, well, on-chain efforts. So there is need for more efficient algorithmic stablecoins. and LNM IT is contributing to that. Happily, so first stability workshop, stable coins focused did take place at LNM IT back in December 2025. So you can visit the website to check the talks, papers, and so on. Hopefully we will have second and so on, and more events. As we have a lot of blockchains, we need for trust minimized bridges between blockchains. And by the way, what's good in proof of work, right? Proof of work is allowing for light clients, more efficient light clients, right? Like NIPO based used in ERGO. But it also allowing for efficient, trust minimized, actually trustless bridging, right? So, well, there are examples of smart contracts on Ergo, which are implementing Bitcoin SPV clients, so just checking proof of work and accepting Bitcoin blockchain header and storing it in a smart contract state. And then against those headers, you can prove transaction inclusion in a smart contract and analyze that transaction in a smart contract, right? So doing trustless bridging from Bitcoin to Ergo. Potentially, so it's not fully done yet, but this trustless relay part is done. And so this is quite cool part about proof of work, especially when well, proof of work can be efficiently verified even in smart contract. Then we need for more peer-to-peer on-chain finance. The problem with current DeFi, especially when we are talking about Ethereum, Solana, and so on, is that we have usually some big monolithic smart contracts, right? And then you're interacting with the smart contract, but then it's not DeFi actually because it's complex and so on. It does have usually some governance, admin keys, sometimes hackers using complexities of the protocols to hack it or stealing admin keys. There were a lot of examples. One from a few
Yeah,
years.
sorry
From
to interrupt. Yes, sorry to
oh,
interrupt.
sorry.
So
Yeah,
you
yeah.
said, yes, sir, you said ki, it is not decentralized, and then you gave certain reasons. But I didn't get
Uh,
how these reasons which you said is stolen of private key and other things are related with these reasons that you have given. It is how it is related with key. It is not decentralized.
so see, there is some smart contracts on Ethereum blockchain, right? DEX, for example, right? DEX. But if it has admin keys, so then the contract can be updated, right, at any time. Usually via multi-signature, right, from smart contract admins. Then it's not decentralized product because yeah, product can be changed, right, at any time. And for example, there were a lot of cases where contracts were updated to freeze hackers' money, right? So, but say in the same way, the contracts can be used to introduce sanctions and so on. Right, and then as an alternative, most of on-chain finance, I believe, should be peer-to-peer, right? So if it's lending, so we just need for two parties in smart contracts, so lender and borrower, right? So no Governance, no DAO, no admins, nothing. So just well, pure well, boring functionality between two parties. And well, on Ergo actually we have some products like this, so peer-to-peer bonds. Then yeah, privacy protocols are working in peer-to-peer fashion, providing non-custodial and non-interactive privacy. And yeah, order book DEXs, so they are peer-to-peer, right? So one party is creating order, making an order, another is taking it, and so on. So yeah, I think yeah, most of finance should be peer-to-peer. Sometimes it's not possible to do a certain product as peer-to-peer. For example, algorithmic stablecoin, right? So it has some global state, obviously. Uh, but other than that, so for financial products like lending, exchange, and so on, so yeah, it should be peer-to-peer, I believe, in most cases.
Yes, yes, yes. So most of the time we hit the upper limit and we cannot solve. So if you see the computer networks also, so initially it was designed totally fault tolerant, uh, decentralized network, but eventually the network infrastructure is owned by few companies. So in ideal world, we look for a totally decentralized thing, but can we achieve a totally decentralized thing? I don't think so. We have totally ideal decentralized network. We can have some kind of decentralized network where some kind of centralization may be there in some
Hmm.
projects, and some it may not have. But eventually, we have removed the monopoly of few countries and few organizations, and we have made system far efficient than what is prevailing at this point of time. Do you agree with this argument?
So. Um, So I think there is demand, right, for well, trust minimization here when it comes to money, right, to borderless transfers and so on. And then yeah, well, I think the problem with DeFi also is that it's trying to hide, right, centralized parts, but when we see hacks and well, admin keys being stolen regularly, right, and then used to drain liquidity from protocols, then yeah, I mean, people are starting to demand, right, more and more decentralized products, and well, peer-to-peer finance, I think, is extreme right here. So maybe it's not. Achievable like everywhere in one day, but well, people would push to that, right? Because well, if base network is unstoppable, then yeah, making stoppable applications, especially which can be exploited by hackers and so on, with money then be transferred over unstoppable networks. It doesn't make sense, right? So,
Yes, yes.
for example, you have some complex contracts with some governance, right, controlled by some big party. Then it's got hacked, and hackers are just transferring money over Ethereum, let's say, to Tornado Cash, and then they buying well some trust minimized Bitcoin rights on some decentralized exchange and bringing back to Bitcoin network. Yeah, well, if everything is unstoppable here, then yeah, well, having those dangerous protocols with admin keys and so on, it doesn't make sense, right? After all, and we have a lot of concrete examples. Like few days ago, the biggest perpetual decentralized exchange on Solana got hacked via some social engineering attack from Northern Korean hackers on admin functionality, basically. So that they get into developers' team somehow and injected well, vulnerability into a contract to then drain money from it. So then, yeah, peer-to-peer setting and simplified contracts do make a lot of sense. Right, and then there is a question how to make monetary expansion right on top of on-chain finance. Because what do we have when we are talking about on-chain money, right, in terms of quality? So we have like top level assets like Bitcoin, Monero, maybe proof of work assets. So Ethereum to some degree, because for most of its issuance it was proof of work. Right, then we have a lot of low quality assets such as meme coins, DeFi project tokens, and so on. Well, usually with a lot of insider allocations and so on. And well, as more and more liquidity going to on-chain products, there is need to make a lot of new base money, right? And how is that solved? How was that solved, especially around 2020, 21, 22? People made more and more tokens, right? And usually they made new tokens to reward holders of all tokens. At some point, Vitalik of Ethereum made a post criticizing, well, money printers on top of money printers. So there is need to do monetary expansion to meet real world demands in more transparent and fair way. So during the first stability workshop, I presented one of possible constructions for that, which is called Chain Cash, which is some unified framework to combine trust and blockchain assets in well, one on-chain functionality. Then, yeah, well, as continuation, I think there is need to work on off-chain protocols with also monetary expansion, so possibility to create trust-based credit off-chain, because Lightning Network has shown that well, when it's one-to-one backed, it's not getting popular as cash, right? So you need to create some more money on top of blockchain assets, right? So to use blockchain assets as reserve when there is no trust, and when there is trust, well, then just allow for new money, peer-to-peer cash being issued, and in this case, it's about off-chain to bypass scalability and other limitations of blockchains.
So
Uh,
yes, so
s-
I have one question. So I
yeah,
think
yeah,
so. Before I ask, I will ask other also. If they have question, they can ask anytime.
yeah,
Otherwise,
yeah,
it looks
yeah,
like
yeah,
I'm the only one who is asking most of the time.
yeah,
If
yeah. So
anybody
please
has
ask.
question, please
Sorry.
ask.
Sir,
No, I'm asking others.
I have a question. How can we possibly use AI agents to boost blockchain transactions? Is there any method of achieving that?
Yeah. Yeah. Let me give an answer in like 2 minutes. Okay. So I'm going to that.
Sure, sure.
Yeah, yeah. Yeah. So right, and then yeah. So this off-chain solution. So it's called the Basis, and basically it's form of this chain cash Monetary expansion protocol to combine blockchain assets with trust-based credit in peer-to-peer fashion, but also now off-chain, right? And so, yeah, it's bypassing limitations of blockchain such as scalability and so on. And yeah, it's intended for humans and as well as AI agents, right? So the basic idea for Basis is to move money creation from commercial banks, right, to trustless algorithms to where goods and services are produced, right, and then blockchain assets may be used as borderless kind of collateral. Right, but when in local environments or in global where trust can be established, yeah, credit lines can be introduced. And if agents are equipped with this tool, it also gives agents rights to, make new money basically, right? And then yeah, we can imagine cases where agents can assign some initial trust, like in BitTorrent. Have you guys used BitTorrent? So
Yes, yes, we
in
have used.
BitTorrent, yeah, in BitTorrent, yeah. So you are downloading content, right? But to download content, you need to upload, right? At the same rate, basically. But when you are just joining the network, well, you cannot, and with fresh HDD, for example, you cannot upload anything, right, to the network. Then it's giving you some free quota, right, for some time. So I think, well, for agents interaction, it could be the same, just credit based. So if so assume there is some agent which is maintaining some repository, right, over GitHub. So then a human can donate money, right, in form of blockchain assets, for example, stable coins. Right, and they also may allow issuance of tokens associated with development of this uh, repository, maybe via a scheduled mechanism or whatever. Right, and then yeah, well, there is on-chain mechanism, for example, for repository maintaining agent to swap those Git project tokens to stable coins, right? But then, yeah, this agent can hire basically other agents, right, to do some work. So it can hire a code writing agent, right, and code writing agents after completion of its work can hire testing agent and then submitting pull request and then repository maintaining agent can hire also reviewing agent, right? So there could be different roles, and as pull request is not merged into master branch, maybe there is no reason to pay in advance, right, for the work which is not done yet. So then, yeah, this repository maintaining agent can create credit, right? And yeah, well, other agents may estimate how good is that credit based on human contributions to the product, to the repository maintenance and so on. And by doing that, so we may have system where agents are creating credit to each other, right? So they are producing money in form of IOU notes. And after all, well, this system, economic system, parts of it could be healthy only if humans are producing economic feedback, right, in forms of appreciation. So contributing blockchain assets, stable coins, Bitcoin, Ergo, whatever. So, by doing that, I think, yeah, we may have blockchain based, but also, yeah, trust-based economy for AI agents. Yeah, and that would be a viable alternative to agent-to-agent payments proposals, which we have now, right, with centralized stable coin lock-in, but also with no monetary expansion, with no possibility to AI agents to create economy on its own. So I think, yeah, this would be the next step in building agent economies. So, yeah, well, if we are giving them autonomy in creating, well, code, right, create content and so on, so they should be able, if we are giving them freedom to also estimate, right, quality of such. So code reviewing agents are getting more and more popular also. So then, yeah, let's connect the dots and let's agents build a productive economy. Does this answer the question, or did you have
Yes, sir.
anything
Yeah,
else?
yeah. That was
All
quite
right.
insightful.
So
Thank
there
you.
is
Yeah,
another question from Manas.
yeah,
Manas,
Hi, hi,
yes,
Crispy.
you
I'm
can
audible.
ask.
Hello.
Yeah, you can raise your pitch and then ask.
yeah. Manis.
Hello, can you hear me? Pushti?
Yeah, yeah. Saptika.
Yeah,
Chalo.
so Pushti, uh, I see here you have worked more in modular architectures and all that. You have built framework of Sporex, right?
All
So do
right.
you see? And all the mainstream blockchains nowadays are monolithic, and you have worked in modular architectures. So do you see the future as fully modular systems, or or you can see we can adopt a hybrid approach where monolithic and modular architectures coexist? So, what do you
Oh.
think about? What's your opinion on this?
Yeah, so Scorex was actually the first yeah modular blockchain framework I created back in 2015, the first version of it. And it's like I don't know, like cyclical process. So back in like 2017-18, it was quite popular to consider a modular design for blockchains. And then there was second wave. I've forgotten. Like 3 years ago, probably. Yeah, like 2023, something like that. There was second wave of modular blockchains. Now, it's a bit strange, maybe periods, not strange, but it's not quite clear now what trends would be right in terms of tech. But yeah, I expect that it would be cyclical in future as well. So there will be trends for modular blockchains, then yeah, fading out, then fading in again. So something like that. But yeah, well, in regards with Corex, so we are considering to rework it a little bit towards doing merged mind sidechains for Ergo. But now it's also kind of fading out, right, as a trend from what I see. Uh, I mean, using merged mind sidechains for experimentation and solving issues with scalability. But I think these trends will return at some point. It's hard to predict then at this point. But yeah, I think by the time this trend would return, yeah, there would be a solution for that.
Okay. So anybody
Okay.
else? Anybody else?
Yeah, and yeah, so please visit this repository. So currently we are trying to develop it as a open source movement. So if you are willing to join, yeah, please join. So it's non-commercial open source like movement at this point. And yeah, about agents and agentic applications. So maybe you guys have a lot of ideas here. I would like to listen how well can we compose agents, orchestrate them economically as well, right? So by doing credits and so on, by allowing agents to do credit. Yeah, you guys, I mean, students are probably spending a lot of time experimenting with all those things, probably, right? Probably more than me with this AI agents and yeah, this tooling which is now coming and trends are being updated like every month. So yeah, it's kind of very hot time there. So. Probably you guys may have a lot of ideas which we can discuss.
Yes. So, anybody has anything to say, or I would ask now?
Yes, yes,
Mm.
sir. I have a question. Uh, like, have we moved away from like aiming for a perfect, just a P2P cash system that we were aiming with Bitcoin or stuff, and like more towards these automated transaction stuff and etc.
Sorry, from peer-to-peer cash to automated transactions.
No, more of like focusing on the bigger picture of like seeing cryptocurrency as more of a commodity than actually a means of like transaction in like day-to-day life.
Oh, so you mean to go beyond the monetary applications of blockchain, right?
Can you
Because
repeat? Can you repeat?
yes,
Can you
yeah.
repeat the?
So yeah, but from what I see, it's about whether should we go from peer-to-peer cash and basically money, right? So to just more broad use of blockchains, right? Like using them for decentralized everything, like Web3 and so on, right? Shub?
Yeah, yeah, that's what I meant. Like, have we actually like moved
Yes.
from thinking that way?
Yeah, so my personal take, so after spending like 15 years looking around, so back in 2016, it was popular to state that blockchain is not Bitcoin, right? So it's going to decentralize everything and so on. So back then, around 2017, I came to conclusion that when people try to use blockchain as decentralized database for like everything, so I came to conclusion that it's dead end, right? So blockchain is actually as a database is super inefficient choice, even if we are talking about decentralization. So based on trust assumptions, probably there are better solutions, right? Even talking about peer-to-peer designs and so on. So, blockchain is fully replicated over peer-to-peer network database. So it's a crazy inefficient solution. And from my observations over 15 years, it makes sense for financial applications only, right? To pay back to maintain such database in the light of its inefficiency. Then I'm very skeptical about all this Web3 and decentralization and so on. So maybe you can commit to some data on blockchain, but that commitment should be short, and still you need to consider economic viability, right? And well. And for most of Web3 products, I think, economically, they don't make any sense. And it's better to use the initial problems, right? So peer-to-peer cash and peer-to-peer financial applications, unstoppable financial applications. And then for so-called Web3 and so on, usually there are better technical stacks just.
Yeah,
Uh,
thanks a lot. And I have another question, a last question. So I stumbled on Ergo first time when I was like studying about zero knowledge proofs. In the way Ergo implements Sigma protocols in the Ergo script itself.
yeah.
So can you talk about it a little and how actually we are using ZKPs right now, and if you see a potential future for zero knowledge proofs more in this case, and also why you went with Sigma protocols and not with like established ZK stacks or stacks?
Okay, so back then ZK Starks were not available, but the original idea was, we came to Ergo Design after checking basically every paper being published on Bitcoin and cryptocurrencies back then. So 2014, 2017, and it was possible back then still to catch up with all the papers. And a lot of papers actually propose to do very cool things on Bitcoin by adding something. Like threshold signature, for example, right? And then do some cool cryptographic protocols. So the idea behind Ergo in this regard was to generalize this approach, so to provide some language to build cryptographic protocols, right? And then Sigma protocols is so Schnorr signature, but then you can express more complex Sigma protocols such as ring signature, threshold signatures with preserving zero knowledge, and so on. You may have these via very simple language. So you may check white paper 2. So we have few white papers around Ergo. So white paper 2 is about the Ergo script language, which is allowing for composing zero knowledge proofs, right? Sigma protocols based. And even with quite modest tool set, it's possible to achieve a lot. So we've shown that you may have non-interactive privacy tools, right? Like zero join. There is a paper on that. I've co-authored with an Indian co-author, Amitabh Saxena. He passed away, unfortunately. And then, in Ergo, there is also another layer. You may define operations with group elements. Also, in a script, and by doing that, we have even more complex examples like bulletproof verification and so on, right? So then you may go beyond Sigma protocols, just so do stuff like trustless zero knowledge protocols such as bulletproof. So there is also one Stark-based example, but I'm still reviewing it. It was wipe coded by some community member. So that would be interesting to discuss, I believe also, right? So how to do cryptography, and what do you need from cryptography even on the blockchain? I mean, aside of privacy. and yeah, even for privacy. So what exactly needed?
Yeah, thanks a lot.
Yeah, so Shubh is my BTP student at LMIT, and he's working on zero knowledge proof. So recently he finished the book by Justin Theller.
Oh, nice.
So he finished that, and now he's going to do some research work on top of it with me.
Oh, yeah. So would be interesting to discuss. Yeah,
Yes, sure,
possibilities.
sure. So now, final few questions from my side. If anybody has any question, then I would ask my questions.
Sir, I had a
Okay.
question.
Who?
Sir, my
Yes.
question was that, like in the previous slide, you had mentioned that anyone, and specifically the agents, have the right to produce money in your chain cash, right?
Yeah,
Gives
yeah.
agents right to produce money. Right? So, by this, like if anyone can issue money, how do you avoid inflation or loss of value in your
Yeah. So yeah, when it's allowed to produce credits, yeah. When parties are producing credits, they are producing money, right? When it's not necessarily fully backed, like commercial bank in fractional reserve system. Then, yeah, well, agents may create a lot of unbacked money, right? The idea is to have economic feedback from humans after all, because yeah, after all, there is need to pay for electricity, so agents cannot just well use money created out of thin air endlessly, right? There are limitations coming, physical limitations coming from the real world. It's more or less like actually production of money in human society as well. Whether we are talking about current fiat system or any other monetary systems historically known.
Does that answer your question?
Yes, sir. Yes, sir.
Yeah, so
Okay.
yeah, there is need for something, right, to connect those credits money with reality, and yeah, well, yeah, there are certain well constraints doing that.
Yes. So, so now I will ask question. So from today, what do you see? How this decentralized finance? There are two aspects of blockchain. One is as a currency, and another is decentralized finance. So when we'll discuss these two aspects, so what do you see? Uh, how the world trade or world finance will change, if it at all will change through this, given that we are entering into some kind of uh, post dollar world or some kind of multipolar world, and given the AI is going, it has changed a lot the way things used to be. So these two things, how it will change the adoption, or it will not change at all. What do you see?
So I think well, so in general, we have two biggest lines here, right? So vectors. One is yeah, institutionalization and well, regulators coming. And yeah, many blockchain based formally protocols are actually being more and more like centralized digital money, right? As we discussed. And so I think, yeah, these trends would continue, but also, well, especially with multipolar world being arisen, there is need for some bridges, right? And then, well, in absence of trust, there is need for unstoppable money. Like this case with Iran shows, and yeah, well, a lot of cases of that kind, actually. So then, yeah, well, unstoppable finance also would develop and would be allowed to certain degree. So yeah, I think what do we have now? So some well, strange games, right, with unstoppable finance and well, attempts to build digital cages at the same time. Would continue probably for many years ahead, right? So back in 2015, 16, so we thought it's a very short temporary status. But yeah, well, 10 years after it's more or less the same. And yeah, I think in 10 years it still could be more or less the same because there is demand, right? Especially with multipolar world being rising for having possibility for unstoppable borderless finance, right? And well, to allow it to some degree. And then, yeah, a lot of maneuvers of different actors in that gray zone allowed to have bridges, right, between different parts of the multipolar world.
One is from money point, which you said, it's quite clear that. So if I compare with the First World War and Second World War, that time there was no globalization, everything was nationalized, and you cannot send money and all. That was very problematic. And the same thing which is happening now in this era, where supply chain and everything is being getting concentrated. The only thing which distinguish this era with the First and Second World War is the money. Now money can be transferred, which you are also saying, through this technology.
Hmm.
So the
Right.
second part is, which I was asking and then suddenly disconnected. Ki this traditional finance, if suppose I have some house at some other countries, let us say in Brazil, and I have rented it out, and I just want rent money back in my place, that is in India. So traditional way cost us a lot. If I do it through some decentralized finance, it takes less. So
Yeah.
it replaces the traditional architecture, which is very inefficient, even though this decentralized finance is not so decentralized, but it is far more efficient than what is right now. So these two aspects I was telling you, is it, is my observation is right?
Yes, yes. So, yeah, well, it's still more efficient and it's still more decentralized, right? So, well, in most cases, so it's not just expensive, but well, in Brazil, for example, there is well foreign currency control, so you simply cannot send a lot of USD, right, abroad.
Yes,
Uh,
yes, the
the, the,
same
the,
here also.
Yeah, yeah. So then, yeah, well, what do we have with this centralized stable coins even? So Tether is, well, basically allowing, right, for all those rules to be violated, right? So maybe, well, they will be somehow enforced, right? But still, I think we are many years behind that. So,
Yes, yes.
uh,
So
then yeah, well, it's well more decentralized. So it's more unstoppable, let's say, right? So even if it's centralized, so well, the party which is controlling it is allowing you to do all those things, right? Because underlying tech, blockchain tech is not so easy to provide regulated environments after all, right? And then there are a lot of players which are extracting profits from that, such as Tether, but also basically Tron blockchain validators. They all basically bypass regulations, right? And because of that, you have freedom of borderless transfers.
Yes.
With time, it would change probably, but it would take a lot of time, I believe, because it's not quite clear how to take control over all of it, all of those systems we have now, even if they are centralized. But nevertheless, well, it's good to work on alternative options. Decentralized for real, I think.
Yes,
Right.
yes, yes. So it was a very wonderful discussion with you, and we have exceeded the time limit also.
Yeah. So, I'm sorry, for postponing it for a few times. Yeah, and
So
would be happy to have more discussions.
yes, yes. So what kind of student we have Cipher Club over here, and a lot of good students are there who contribute and they win
Oh.
hackathons and all. So what kind of collaboration can happen?
Let's discuss. So, do you guys have some Telegram group? Maybe this club or
Club
not?
doesn't have Telegram group. Uh,
I see.
so I think one of the coordinator is also here. Siddharth, are you here?
Yes,
So
I'm here.
yes, he's here. So he doesn't have Telegram group. As far as I know, they have you. Do you have a Telegram group?
No, we don't have Telegram group. We have a WhatsApp group, but sure, we can create one.
Yeah, but they
Ah,
can create. They can create.
oh, maybe I can join WhatsApp. Okay, so let's discuss. Yeah, let's keep in touch. Definitely.
Sure, sure, sure. And possibly the stability workshop which you were saying that we can organize again.
Yeah,
Yeah.
so I will try to visit Bruno maybe this month even. So yeah, he's currently over busy with reviewing Google Summer of Code submissions. There are like 400 of them.
Okay.
Yeah, so complete mess, but let me check. Oh yeah, 371 proposals for Google Summer of Code. Bruno is evaluating now. Crazy number.
Okay. So I think we will close this meeting if you. Mm,
All right. So, thank you a lot. Thank you for your questions and
yes, yes.
attention.
Thank you for joining and have a wonderful discussion with us. And we enjoyed thoroughly. And we'll catch up again.
Thanks a lot.
Thank you, everyone. Bye.